TGIF, everybody. How you doing, Brock? Hope everyone had a good week. So another wild week of action. And guys know I talked about it early in the week. Thought we may have bottomed in the S&Ps, and that this breakout of the wedge was important. Added this green line in here at 2400. Good, buddy. Hi, Sinatra. So this was again, I said yesterday, where the Fed made their first announcement, and it just blew. So not coincidentally, this 2400 level came in with the breakout of the wedge. 38.2, in these environments, I don't know about you guys as traders, I didn't have a hard time trying it, but I do have a hard time holding positions in this. I mean, I normally do, but it's even, exacerbated a little bit here. So, what I'm doing here is going for minimum expectations instead of maximum. So 38% was, I think, a conservative target because, if it's a wedge, it's got further to go. So, as far as extensions, not as much high conviction as this level at 2400. And, there have been a lot of studies after a crash about having retests. And you never know when the retest is going to begin, but under 2400, it would actually measure new lows. And then sometimes with wedges, you get a retest of it, and the retest is going to come in back at the lows. So that's possible too. Anyway, went to the door on S&P longs. I'm not short here. I'm flat. In this environment, I'm just happy to, be correct on a probability and go to the door and say next. So something I tried yesterday that's working out a little bit is the short in the euro from the 50% level here. Already taken partial profits, big believer in it. We could extend to 61.8 when you look at it, and it is Friday, right? It's a darn good looking weekly candle. I mean, we start taking out 1160, it could be good. I'm looking at it this way. I like these big range candles. So is this a daily? It's a weekly. Uh, 4 hour. Huh. Must be the weekly. Anyway, I was looking at how we could come up with a arithmetic target on this. It must, yeah. Anyway, I forgot it. So the Dixie, I know a lot of people are saying that's it for the Bears. So, here we are held where it had to. I know it was on the euro. Had this real weird candle. I don't know if it was a 1 hour. Anyway, I can't find it. With the end coming off the way it is, gold didn't make much hay out of it. I mean, it's still grinding. Maybe it's a dysfunctional market till they come up with the new futures contracts. It's just dysfunctional. But look at what we tagged up here, 78.6. And maybe this is one, this is two, and we get a three next week. But back under these lows right here, even if you're long-term bullish gold, you start taking this out right here, you could see 1550, which, if you're a bull, that'd be a great buying opportunity. And I really think that my highest conviction trade on the board is here, US dollar yen coming off. that with everything the Fed has done, I've talked about this, everything the Fed has done, and he had a couple of, about a 300 pip decline in US dollar yen, which would normally be constructive for yields, right? And TLT did not make much hay out of it. And so I'd say my biggest conviction trade is that we're not going to see 180 in the bonds again. We're not going to see 40 in the 10-year. And this is a bad print. We're not going to see the 30-year back under 83. So, what I see developing here is this could have been a 5 down here. And maybe this was 1, or maybe we haven't completed 1, 1, 2, 3. I don't know. I don't know Elliott Wave. Anyway, I wanted to buy a break, and I'm looking for something like this or a fib extension. And, if you don't trade bond futures, there is an ETF you could trade. The opposite of TLT would be TBT. Here it is, right here. So TBT, holding this probably 61.8 or 78.6 back, but can make a move up to 23 on an ETF. That'd be a pretty nice trade. So if someone said, Dale, what's your biggest conviction? Is it a big bear market in stocks? Is it a big bull market in metals? A big bull or bear market in the dollar? I would say that it's interest rates for me. And we'll see how, if I'm right about yields, I would think it wouldn't be too positive, the metals, and it should be constructive, the dollar, but that's, may not be the case. But you know what, guys? It only takes one. I saw guys trade their whole career in one trading pit on the floor. They knew cattle like the back of their hand, and they did quite well. So you don't have to really, have conviction on 10 different instruments. They want a flat curve. Okay, we want to go to the 10-year, the front end. And actually, the front end does look better. It is starting to flatten again. Good observation, Brock. But you want to go the 10-year note then. Keep it shorter term. And, just, and this will be it. I'm going to turn it over to Blake, but just a 10-year note. This was about a 90 basis point rally. And, in here, as long as we hold 60, you could have 90 from here. If you had 1.618, it'd be 140. It's going to take you back to a 2% yield. So, those are my thoughts going into the weekend. And this is something that I recommend people do on Fridays because it gives you a whole weekend, especially since you're, a lot of the country is on, personal lockdown. The troops aren't out yet enforcing it, but gives you the whole weekend to learn to navigate and get used to it, plus do your work. Your best trades for next week, they're drawn up on the kitchen table. They're drawn up on the kitchen table over the weekend. So, the markets aren't running. You're not under pressure or duress. And you can see the forest from the trees. And, speaking about forest from the trees, why not take a walk in the park with Forest Park FX and find a broker that's going to give you a nice rebate or help you pay for your not prescription, subscription here.
Or stay with your broker and still make
Yeah, stay with your broker. Yeah, you could do that.
I stayed with my broker actually because it was a good option. So, I just enrolled to the program and I still make money.
Wait. You get Forex Analytics for free?
Yeah.
Just kidding. Well, so guys, that what Steve is saying is he obviously being one of the co-founders of Forex Analytics and on the team, he gets Forex Analytics for free. So
cashback, yeah.
So he got to get a cashback option with the brokerage firm he's currently using. So everybody should be doing that. I mean, God, if I could get rebates from JP Morgan, dude, I'd make a killing.
Nice. It would be enough just for you to get break even, right, at the end of the day. You would make money from rebates.
I spend thousands and thousands each month in commissions with JP Morgan. I mean,
they love you.
Oh yeah. I'm peanuts. You should see the rest of the office. These guys trade huge. The guys that I trade with, they're but anyway.
We also have an announcement, right, Blake, that your daily roundup is for members only now?
Yeah, it is. Yesterday was my last daily roundup for
general public.
It's not like they can't watch the video. It's just they won't. It'll be like an hour or two after the fact.
Like Face.
Yeah. Well, no, Face is.
Oh, yeah, Face, that's right.
Anybody can watch Face. No, like European crossover.
Oh, yeah. Okay.
All right. Yeah. So it's going to be for clients only, but we'll still post on YouTube so you guys can see it,
okay,
an hour or two later, or, before Asian trade or whatever. So, yeah.
All right. So, what do you think? Pretty strong week the euro put in. I'm selling retracements, but I look at that weekly candle and it gives me a little pause about bearish euro.
Oh, I got, just so you guys know, I actually got run over by the euro yesterday. I was short. I was trying to play this. I'll just do it roughly. Yeah. I was trying to play this I'm just kind of off the cuff driving it or drawing it. Yeah. But I was shorting over here at 109. I want to say I was short at 109 like 20, and I had or maybe even like 10. Roughly, my average was around 109, and I had my stop like at 109.65 somewhere right. Or no, I had my stop like right through 109. 90s, like somewhere through here.
What are you thinking now, though, bro?
I'm sorry.
What are you thinking now, though?
No. Wait. You know what? I'm trying to recount what I did yesterday because obviously I did a bunch of stuff. I had my stops actually at above 110, and so I did get stopped out yesterday. And as I was trying to short what I thought would be a pennant, but now that we're where we're at, I'm not sure what to do with FX as far as the euro goes, because I am bearish equity. So let me start off by saying that, because if I'm gonna show you a couple of charts. First of all, you guys don't even have to be Forex Analytics subscribers to kind of know what I was thinking, because my chart of the day yesterday was the S&P. The chart of the day on our Forex Analytics blog was the S&P. We hit the 38% retracement downtrend line. I figured, well, this is my best manageable risk opportunity to be short the S&P is yesterday afternoon, after Asia opened, or the S&P opened again. I just laid into some S&P shorts. The reason why is because it was 38% retracement downtrend line, and even though we're, excuse me, it's Friday. I'm getting a few hours of sleep every night. By Friday, I start to yawn, so just bear with me. Anyway, I know we're back above 2,500 at least for right now, but I knew that if we got above like 2,700, I'm wrong. And being short at 26, above 2,600 was where I wanted to be short. I am short now. And I, told everybody I shorted yesterday afternoon in the chat rooms. and even if you weren't in the chat rooms, you can see the pattern in play was put in yesterday too. Now, I want to show you a chart that I saw after the fact, and I thought this is really interesting, but also very compelling for what I'm doing. One of the guys from my office, he retweeted this tweet from this Nautilus Research, and I don't even know who they are, but this is the S&P from a couple of days ago. This is the S&P from 1929. This is the S&P from 1987, and what you'll see is, you know, all 30% declines, bounces of about 20, 15%, 18%. And yesterday we bounced 22%, basically 21% off the lows. And then, you know, my thoughts were, well, we're going to go back and retest these levels. Now, if you do use Forex Analytics, I actually confirmed what I was doing with Gregor Horvat's work, and he's like, okay, we're going into wave, you know, or we're going into the B wave, which will take us back down towards 2300. And I'm like, well, that's roughly in line with what I was thinking. I was thinking, you know, we might retest these lows or maybe even hit new lows. But regardless, I knew he was thinking, you know, we've got wave B coming. And then I was looking at all this, and I'm like, well, that all also makes me feel good that we could possibly hit new lows from here, maybe close to 2000, or maybe even just 2300. So that's why I'm short. So with that being said, the question is, what do you do with currencies? And I don't know what to do with the euro. I mean, the euro just hit the 200-day moving average, which again, if you use Forex Analytics and you read like last night's analysis that I wrote, okay, the end of day analysis, the euro dollar squeezed past the resistance zone and 38% retracement, invalidating the pip, which is the pattern in play, and making a move to the 50% retracement. The 200 DMA may also offer some key resistance in this rally. So last night we hit the 200-day moving average right at 110.82, and then we've fallen, you know, 80 pips since then. I did not short the euro dollar overnight. So the question that you asked me, Dale, what do I do now with the euro? I don't know from here, because I don't want to short it after an 80 pip drop, but then again, I don't want to be a buyer either. So I'm just kind of watching the euro. But also, let's say the stock market goes down from here. I have a little bit of aversion to shorting the euro too aggressively, knowing that currencies like the euro Aussie may be very well supported. You know, I'm looking at the euro Aussie thinking, okay, while we're above this 180, I don't really want to be on the short side of that. I don't want to be on the short. I'd rather be on the long side of the euro Aussie, because these tend to move higher in periods of risk aversion. So the question is, well, what do I do with currencies? And that's when I start looking at, you know, things like something that I'm short right now is the Kiwi. All right. Now you might be saying, oh, well, why the Kiwi? Well, the Kiwi has what I think intraday an inverted, or excuse me, not an inverted, a head and shoulder pattern that's developing. So as long as we stay below 60 cents, sorry, as long as we stay below 60 cents, I'm going to stay on the short side of the Kiwi dollar. Now, I'm not getting aggressive yet until a break, excuse me, until a break back below 59.15. A break below 59.15, or, you know, basically 59 cents, I am looking to, you know, be a little bit more aggressive with the Kiwi on the short side, but I am building a short position as of this morning. I've been selling it up in the 50s and 60s. So that's what I'm doing. And you know, if you know, you could look at the Kiwi and go, okay, well, yeah, it makes sense. Would you trade the Aussie in the same fashion? I would. The Aussie's developing a very similar, you know, head and shoulder pattern. it's developing a very similar head and shoulder pattern as well. It's a complex head and shoulder pattern. So it's, you know, when you have a, you know, uh, a higher right shoulder, a slanted neckline. So I believe that the Aussie dollar is also a short, but I don't want to get too terribly aggressive while, you know, we're above, you know, this 60-50 level. But I think the Aussie's a good setup for a short as well. So with that being said, I'm focused on these commodity currencies more as shorts right now, and you guys might be thinking something along these lines. Well, Blake, I hear there's a lot of pension fund rebalancing for the end of month, you know, flows, which may be true. However, we've been talking about the end of month flows, the pension rebalancing for since probably like Tuesday. The Twitter sphere really started talking about it since yesterday. My thoughts are regarding the S&P and regarding the stock market, a lot of those end of month rebalancing flows have already been done. And by the time that the majority of the market starts hearing about it, hence yesterday, I think a lot of it has been done. Now that doesn't make me right or wrong, and I could be completely wrong here. Maybe we do go into, you know, next week, next Monday and Tuesday, aggressively, you know, buying stocks. The market does, but I think a lot of those moves, a lot of that flow has been already taken care of this week, and that's what propelled us 20% off of the lows. So I think it's going to be a little bit trickier and a little bit harder at this point, and that's why I'm just kind of focusing on a couple of these commodity currencies and just keeping them on my radar as far as you know, looking for opportunities now. You know, I want it, and just so you guys know, I had a couple buy orders for like the dollar Canadian. Last night I had a buy order for 139.50. You can see all these little, I was hoping we would get one more drive down here last night to be long. That didn't happen. I had an order for the US dollar Mexican peso. I wanted to be long down here. You can see right here, this just in the new lows. I was hoping that we would get in the new lows and then I could get long. That didn't get triggered. The one last currency that I had an order out last night is to buy the US dollar Norwegian krona right at the 618 at 1030. I had an order to get long here. That didn't happen. So I had some orders to get long or get short some of these commodity currencies after these big moves. They didn't get tripped last night. So, you know, now I'm just, you know, shorting the Kiwi dollar, shorting a little bit of Kiwi dollar up here. And like I said, I'm not getting aggressive till we're back below 59.15, 59.10. Then I'm going to start, you know, aggressively, you know, being on the short side intraday. But for right now, it's Friday. One of the things that I mentioned yesterday, like the euro, I actually turned my profitable day yesterday into a negative day. I've actually had a really good month, and I'm not so keen on because this is the end of my quarter. I'm not so keen on ruining my entire quarter with a couple of bad days. So I am trading rather lightly for the next couple of days, so I can you know, get paid this quarter, because you know, in this environment, it's important that, you know, to try to maintain capital best you can. So I'm not being very aggressive right now. I'm actually trading fairly light, and plus the volatility is so high that you gotta you know, be extra careful. But I am trading a little gingerly the next couple of days, just knowing that it's the end of the quarter, end of month. I think a lot of the flows have been done, but I'm not 100% sure. So therefore, I think it's wise for you guys to be really, really careful the next couple of days. It's not gonna. I don't think it's gonna be easy by any stretch of the means. But I do have a more of a bearish bias of the S&P and risk while we're below this trend line here and below the 38% retracement. And remember, guys, just so you all know from a trend standpoint, when you're in a trend, which I believe we're still in a very strong bearish trend, like in equities, when you only retrace 38% of a move in a strong trend, that reinforces the trend. So in this case, when we have a what I believe to be, we're in a bear market right now. I believe, and let me grab I'm going to grab a draw here. Okay. So I believe we're in a bearish trend. While we're below this 38% retracement, I believe this bearish trend to still be strong. Now, do I think we're going to drop at the same rate that we just did? No. I would be probably thinking we do something like this if we hit new lows. It's not going to be as strong. It's going to be choppy, and it's not going to be, it's not going to be pretty. All right. It's just going to be, we're still in this bearish trend, and it'll probably do something like this. You know what I mean? I just don't, I don't want to be bullish while we're below here. You guys have heard me say a lot, I'm expecting an L-shaped recovery, not a V-shaped recovery. I'm not expecting the market to do this. If you're out there listening to CNBC and they've got you convinced that we're past the worst of this, you're wrong.
Doesn't really matter, Blake. If they were out there listening to CNBC, they don't have any more money left.
No. I mean, that's not true. There's a lot of very sharp people out there, but don't let the financial media let you believe that we're past the worst of this. Look at what's happening in New York. Look what's happening in Michigan. Look what's happening in Louisiana right now, and in California. It is still a very dire situation. And when you take the biggest, when you take California, when you take Michigan, when you take New York, you take Florida, is going to be a disaster. You've got all these people that fled New York over the last week going to Florida. Florida is going to be a hotbed. Then you got Texas. This is probably going to be it's going to spark up in the next couple of weeks. These are the biggest economies in the United States. Will we be able to open parts of our economy like, the green belt and, some farmlands? Yeah, of course. But I believe that we're still in for, several weeks before we really wrangle the situation under control. So be careful about being too bullish at this point in time, I guess is what I'm trying to say. All right. Okay. And I want to say, thank God it's Friday, and I'm so happy for this. It's weird. You lose track of what day it is. And, I know for us in the markets, it's a little easier than the average person, but man, I'm ready. I'm ready to have a cocktail tonight. I don't know about you guys. So
you should try doing that with a toddler running around chasing the cats.
Oh yeah. Anyway, guys, I want to say, if you haven't, joined Forex Analytics, please do so. This is we have our special that I know it says it expires the 29th at the end of this week, or end of this weekend. So take advantage of it. It's it's a way that you can be involved in our community, not just listening here, but be chatting with us all day long. I'm in the chat room for 12 hours a day. So and that's even though there's so many other people in there, not just me, obviously, but it's if you want a community where you can not talk about, other crap, just, more about the markets. And of course we chit chat a little bit in there like you would expect, but it's a safe place for traders. That's me and the other guys, we designed it to be, is just a safe place for other traders to be at, to be able to talk about the markets, what's our interest. So anyway, I hope you guys get involved, and I want to thank you for listening in every day, and pass it over to my colleagues Steve Stelios and Coach. So
thank you, Blake.
Thank you, Blake.
Thanks, guys. Hey, happy Friday to y'all, and have a good weekend, and be safe. Wash your hands. Keep your distance. Be good to each other.
Yeah. No prostitutes, guys. See you guys.
Had to leave it on that note. All right. Bye.
Oh my God.
I think we'll call it a day. All right. See you on Monday.
That's it. Yeah.
Hey guys, on a more serious note, I was listening to a comment.
Political correctness meter just broke, so nothing else to say here.
That all the central governments going big to stem this world shutdown. That Germany went the biggest. I think 30% of GDP is their package, and the point was that the U.S. at $2 trillion, it was only 10% of GDP, and that most likely they're going to have to come in with another package after this. It wasn't enough. What's the point compared to the rest of the world? The US did not go the biggest, Germany did, which is pretty unusual because Germany is really conservative about that.
Yes, Coach, I want to remind you that before we had COVID, I showed this on this show. You remember it?
Mm-hmm.
These are Germany's deficit. If you notice, instead of a positive sign, the vast majority of the years we have a negative sign. That is surpluses. So Germany, since 1991, that the data shows here, until last year, has on average run mostly surpluses. So even Keynes himself believed that an economy should be running deficits when times are hard and surpluses so they can fund those deficits when it is on expansion. So yeah, Germany can afford to have a bigger package because they've actually saved that money.
Yeah.
Unfortunately, that is so far away from being true for the US. US was already running a real deficit if you count the off-budget items, which is a joke, having 40% of your balance sheet being off-budget items, but whatever, of like 7-8%, and it's currently going to be at 15+%. Germany was running a balanced budget after mostly running surpluses, so yeah, they can afford to do that. That's the big difference. Germany does not need a central bank to fully monetize all of the debt they issue to do that. Speaking of which, we've had that conversation as well. Fed's balance sheet is now above 5.3 trillion. And this is just the beginning. If you remember, we had this conversation when quantitative tightening was finishing up and we were at 3.7. And, we said that we should be at all-time highs, rather soon. Yeah, I could never imagine the pace with which we will be jumping to all-time highs, because we went from 3.7 trillion to 5.3 trillion within a period of, what was it, like 3 months? Yeah. And with the pace we are accumulating assets, I think 10 trillion is easily doable within the next year or so. So, that's a huge issue with huge macro implication, which we're not going to talk about today, because after Stelios briefly tells us what we have Gregor with us, and this time he he should be okay with his computer, so we can get his input as well. So, Stel, what else did we have overnight?
Well, obviously the main event is still the virus and the way it's going. The US is increasing in cases. Spain going unabated, unfortunately. Italy is also not showing it. They had a couple of days which were lower, but now they're grinding higher again. It's like it's still fully, unfortunately, going on and spreading. And I think these lockdown measures eventually are going to have some effect. But we've said this every single day here. The effect on the economy is going to be big. We had, interestingly, I don't know if you saw it, you're going to laugh. We had some Italian numbers today for March. Okay, March is this month. Okay, so everything going, it's not January or February before everything went really, tits up, as they say. So we had Italian business confidence and consumer confidence. Business confidence came in quite a bit lower than expected. Consumer confidence came in higher than expected. Above
Okay.
above 100, which is the average point. So it shows you businesses already are feeling the heat, right? Because they have to stop operating. Many of them are going to close. It's going to be very tough times. But the average consumer, sitting at home or doing whatever, yeah, it's going to be okay in a couple of months.
Yeah, we've said it multiple times, Stelio, and that has always been the case. Consumer confidence was always a very lagging indicator.
Yep.
So it's always late in turning higher after a recession or at the end of a recession, and it's always late in turning lower, when one is beginning.
Yeah. So that was on that side. Okay, we obviously have the 2 trillion stimulus package, which is due to be passed on the House of Representatives today in the US. Donald Trump's going to sign it. So this is more or less priced in by the markets, as we saw the last 2-day big equity rally. I agree with Blake. I think equities are probably going to struggle now going into next week as month end goes and if fund rebalancing is done. I still think, and I've been saying this in chat room as well, I think there is one more leg lower. I think it's going to be probably the last leg lower in equities. How low can it go? I was always saying 1,800 to 2,000 in S&Ps. I still think we can get there.
But I agree 100%, Stelio.
After that, just the amount of stimulus in the economies of the world